Well, it's a very good morning from him, and it's a very good morning from me. Hope you're well. Welcome to Paul Archer's live stream, My Mortgage Insights, Financial Advisor Insights, all those good things. Hope you are well. Hope's all good with you. Hope wherever you are, you're enjoying the spring-like weather or summer weather, I suppose we've probably got now, haven't we? All been happening last couple of weeks. Didn't come on last week. We had a big do here in the UK called the coronation, which was just wild. However you want to look at it, it was just wild. I mean, that Mordaunt lady holding that sword for 60 minutes. I mean, who else in the world would do that? Anyway, we did, and it was great. So welcome to this morning. We're going to talk about a couple of things that, unless you've been hiding under a rock, you won't, or you would have heard about them. So I want to update you on things like that. But this morning, we had Zelensky turning up, like that dude from Ukraine, cool guy. He rocked up at Chequers to go and see Rishi Sunak, our PM, and they had a big hug, a big bear hug like they do. And it just tickled me. There was Rishi Sunak in his suit, his dark suit tie, and of course Zelensky always wears the camouflage gear, doesn't he? The overalls, and they just look wrong together. I think Rishi and that just need to update themselves a little bit. The world has moved on from suits and ties. We really have. Anyway, enough of that. I think it's great he's come over. And it's in the news. It's surprise visit. I thought, hold on, they're not actually going to plan it, are they, and put it on the news, are they? Because the Russians will send something across to knock out the helicopter. But anyway, enough of that. Let's get on to some serious stuff, shall we? Because we can go on air. So, hope all's good. Hope you're fine. Hope you're enjoying your mortgage world or financial advisor world. We're going to talk about 100% mortgages today. And I want to talk about the government mortgage guarantee scheme. And then I want to talk about some referral techniques or nirvana, just to sort of get you up to speed with that. So a few ideas to help you. Now, of course, unless you've been hiding under a rock or you've been on holiday maybe abroad and you've been off grid, who does that these days? You would have not missed the 100% mortgage introduction last week by the Skipton Building Society. Good lender, know them very well. And it did tickle me because on LinkedIn, you had all these mortgage brokers announcing new 100% mortgage from Skipton. Great news, everybody. Oh, hold on, but people do read the news. You don't need LinkedIn for that. And besides, your customers aren't on LinkedIn. And so as soon as you mentioned Skipton, I went onto the Skipton website because, the link's there. It takes 3 clicks to buy that mortgage. Come on, guys, think about this. 3 clicks. Click 1 was rent a rent. Click 2, start the affordability. Click 3 was buy now. They're making it very simple to go online and buy these mortgages direct. So be careful of that, brokers, that you work your angles, you get your value propositions right. We'll talk about that another day, shall we? Anyway, let's get into 100% mortgages. Just pop over to the whiteboard for this one, because I have prepared for you the whiteboard 100% mortgage 2023 version. Now, what I'm not going to do is give you all the features of the 100% mortgage that Skipton have introduced, because everybody's done that to death. And besides, you could get ChatGPT to tell you that, or you just Google it. It's not a difficult thing. But what I want to do now is to explain why I think brokers are wrong. There's a lot of brokers, when they've been interviewed about these things, say, oh, my fear, contagion, locust infestation. How dare they introduce the 100% mortgage? It's going to destroy the housing market. And it's wrong on all levels, and I want to explain why that is the case. I think it's project fear. Brokers introduced this thing called Project Fear, a bit like Project Remain, wasn't it? Project Brexit, whatever it was. So 100% mortgages, we know what they are. We don't need to be reminded. Effectively, we've got a property, or whatever the property looks like. They're not doing new build flats because they lose their price very quickly, like a new car off the showroom. So we're looking at houses, and they're looking at about £600,000 at the moment. And the whole point is that the house is bought with a 100% mortgage. So your mortgage, let's put that there for you. It's your little sort of, it's 100% of the value of that property. Simple as that. It's not much more to it than that. There's no deposit, nothing like that. And of course, the brokers are all concerned that this is going to destroy the market, because they're all getting very sort of official looking, But of course, it won't. Now, the first problem they've got is that it will cause negative equity. If negative equity happens, what's going to be the repercussions for the broker? And the thing is, of course, that the brokers lent the money, the borrower's in the house. If the house price goes down, Would it cause negative equity? Of course it will, only if they sell it, because it's a paper value, isn't it? Will the house price go down? Well, who knows what's going to happen to house prices? But what the mortgage company has cleverly done is they've made these 5-year fixes. They're looking to get people that are going to be there 5 years. Over a 5-year period. It might get a little bit, but it'll go up over 5 years. Always has done, always will do. So the prospect of negative equity, it's not really going to happen. And if people are forced to sell because they can't afford the mortgage, the government, of course, have introduced or reintroduced SME now, support for mortgage interest, which is actually payable after 3 months now. They've increased the period. It used to be 9 months, isn't it? So even if somebody's made redundant or whatever, they will still get government support to pay the interest. So chances are negative equity won't be a problem. And the whole point about 100% mortgages, of course, is that you buy it and then the house price hopefully goes up, or you've got a repayment mortgage, which you're paying off the mortgage each month. So after 5 years, not only will the house be slightly higher in value, we hope, of course, but the mortgage will be lower because you will have paid off capital. So it'll be around about the 95% mark anyway, even if the house price is. So I don't think that's a problem. The second one is affordability. Now, affordability, again, is not a major problem because they are assessing people cleverly and securely. They're looking at rental income, 12-month rental. Are you renting? Where's the evidence of your rent? Have you paid all your bills? You have, great. You guys can run a house. That's fine. I think it's like dealing with a second-time buyer, effectively, if somebody's already had a mortgage. The same concept. So the question is, and this is the big issue for this session really, is where does the lender get its security from? Because if you think about it, the lender's lending 100% value of the property, so it shouts danger, danger. But these things have been around before. I mean, when I started off in broking in 88, 89, 90, we had 100% mortgages. Of course we did. And they carried on all the way through to about 2008 when they stopped with the financial crash, because the regulator, because they've missed the financial crash, you see, thought they'd get a bit tough, so they banned all these things, and 100% mortgages went because they felt they were risky. I don't think they were, but there we go. So where does the lender get its security from? Well, first of all, they've got the house. So they've got the house as security. And again, will it go down in value? It might do. It probably won't. So the house is always there as security. Second security that many lenders used to is a high lending charge. Now, this is interesting, actually, the high lending charge, because back in the day, when we arranged 100% mortgages, we had to arrange high lending charges or mortgage indemnity guarantees to the tune of £25,000 policies or percent. And people used to pay £2,500 to sort of £3,000 in fees for these things. Very expensive, but it gave the lender security. It was like an insurance policy. So if the person was, they defaulted, they had to repo the house, and they lost money on the mortgage, the lender could go to the insurance company and claim against the insurance. But I don't think the Skipton have a high lending charge. I think they're using the government's guarantee scheme, which I'm going to look at in a second for you. Now, the government's guarantee scheme, which was brought in a couple of years ago, has been extended now to the end of 2023. And it effectively allows lenders to lend up to 95%. So it's not 100%, I get that, but they're probably using a little bit of that. They have to pay for that because the interest rate's higher. The interest rate that they're charging is around about 0.75% more than the average. So I think they're using that to buy the government's guarantee scheme and probably self-insure themselves. So they are getting a kind of higher lending charge back, which I think is really quite an important thing to do. The last security, if you like, is the mortgagor. Now, do you remember the mortgagor as opposed to the mortgagee? That's the borrower. The borrower is the mortgagor. Now, as I mentioned before, they're vetting these people very, very carefully. These people have to have a track record of rent and bills and council tax to be able to run a house, a property, maintain it, whatever it is. Renting, I guess, not total maintenance, but it's a little bit there going on. They are used to running a house. They're used to paying a mortgage, if you like, in the form of rent. So they are actually vetting these people very carefully. They're not being stupid with this. They're doing proper underwriting. So that's good security as well. The interesting one's the high lending charge, isn't it? Whether they are self-insuring, I think they probably are, but they do. These building societies, by the way, have been lending for some of them 150 years. They know what they're doing. I worked for one for many years. They know what they're doing. They're not going to rush into this. They're not stupid. And I don't think anything's going to come to harm. I think it's a great scheme. I really do. I really think these are great things. We had them for 20 odd years. They help a lot of people buy a house the first time. Once they're in, they can then start paying off the mortgage through capital repayments. House price goes up. Hopefully, they can then remortgage or move on. It's a great stepping stone, and I'm really pleased it's come into the marketplace. 100% mortgages. This may well change the first time buyer landscape. I think it will. I think that's the key thing. It's lack of deposit that's stopping first time buyers. Anyway, I hope that's been useful for you. Bye. Well done, everybody. Okay, so that's 100% mortgages. Again, I didn't want to update you on the criteria because there's no point. There's not actually much to a 100% mortgage anyway. Now, I did talk to you about the government's mortgage guarantee scheme. So I'm going to give you a bit of an update on that just to make sure you're comfortable with that and see how it fits in. Again, will you want to talk to customers about this? You might do. Probably people at dinner parties, if they ask about this 100% mortgage, you can then, as a professional mortgage broker, explain how it all works. So let's head over to that whiteboard, shall we? So we can give you an update on this one. Again, I pre-prepared the title for you. The Government Mortgage Guarantee Scheme is what I want to take a look at. Now, you probably read about this a couple of years ago. Government introduced this during COVID, and the whole point behind this was that they wanted to encourage lenders to start lending at 95% again. So what you've got here is you've got your property. So let's just draw our little property again. We like our little properties, don't we? Well, I do anyway. There you go. We've got our little property. And during COVID, the number of 95% mortgages just like fell through the floor. So the government wanted, again, they wanted lenders to be encouraged to lend 95% of the value of property. And they introduced a scheme to do so. And what it basically did is if anybody had a 5% deposit, they could still buy a mortgage at 95%. But the clever thing was that the government provided government money for the higher lending percentage. And basically what they said to lenders, look, you can still lend 75%. Okay, you still do the 75% mortgage. That's your only risk, if you like, a 75% loan to value mortgage. So if the house price goes down, you're cool. But what we'll do is we will guarantee the difference here. We'll guarantee that for you. We won't lend it. It's not like Help to Buy. It's not the lender still lends it, but the government's guaranteeing it. It's like a high lending charge that we spoke about earlier. And that, of course, allowed then the lender to do 95%, but really only be lending 75%. It wasn't like Help to Buy, so you get a low rate of interest or anything like that. You actually still get relatively frothy interest rates for this type of mortgage because the lender has to pay the government a fee. That's how it worked. So they charge it through the interest rate. It's a bit like Skipton and probably doing with 100%. Now, it's helped apparently about 24,000 households. Not that many, I agree. But what it did is it encouraged lenders to go back to 95% lending again because they realised it was probably something they should be doing anyway. So 24,000 people, and I think it's absolutely brilliant. It worked really well. It's been going now for a couple of years. On the quiet, it's not really being sort of publicised at all, but it has now been extended to the end of 2023. So it's still going on. So it may well be part of a 100% mortgage, you see. That's the whole point behind it. That's the government's guarantee scheme, really. Not much more to say about it than that. It works, and it'll probably be continued after 2023 as well, because the government aren't providing money, they're just providing a guarantee. But if house prices carry on going up, then there shouldn't be any major problem, is there? Hope that's been useful. Bye on that one. Lots of short, sharp stuff going on there, isn't there? There you go. And that's interesting, isn't it, really, when it comes to it? Because, we're talking here about lending at high percentages. And that's the key to the whole process, isn't it? Lending at high percentages. All right. Let's finish off then. And, we're talking here about lending at 100%, 95%, stuff like that. And I joked about people on LinkedIn, brokers on LinkedIn, promoting the product. And by the way, you're not a product promoter. That's not what you do. You're not transactional. You don't sell products. You don't sell mortgages to your clients. You sell the opportunity to sit down for a consultation and to elicit needs and to recommend accordingly. That's what you sell. You sell a meeting. You don't sell products. So don't start putting products out on LinkedIn and social media. It's ridiculous because people will just go directly to the lender and buy it themselves. No, you're selling a time with you to discuss needs and issues and wants and stuff like that. Now, how do you do that? It's entirely up to you. I wouldn't start blasting around on LinkedIn. That's a B2B channel. I think the key for the mortgage broker, the professional mortgage broker, the key for her is to generate leads via other methods. And there's a thing called referral nirvana that I talk about. Nirvana is it 1992 band, wasn't it, with from America, grunge. Nirvana means excellent, and there are 4 types of lead generation that you will get involved in as a broker. 4 types. Think about this. Type 1 is intelligence. This is intel, I call it. So, example might be a new housing development to the other side of town has just opened up, so there's mortgages to be sold. It's intelligence, it's information, that's all. And you can then go along and make inroads if you want to. That's number 1. That's okay. We don't really have the bandwidth and the budget to be able to market that way. A lead is different. Number 2 is a lead, and a lead is call Umran or call Sabina on 07702 341 7669. Give her a call. That's a lead. Leads come from more places, and you might buy leads from the internet, and you get a lead. You get a text through, give this person a call, and it could be a lead from a professional connection, from an associate or something. Give Bob a call. It's okay, but that person's probably not expecting your call. And when you do call them, it could be construed as a cold call. Not allowed to do that anymore. Shouldn't do it anyway. So a lead is okay, but it's usually fairly cold. So that's a lead, isn't it? The third one is a recommendation. Now, a recommendation is from somebody that you know, professional connection or personal client. I've spoken to Sabina about you, and you can mention my name if you wish to. So that's a recommendation. So we often get referrals, don't we? And we call that a referral, but it's not. It's a recommendation. So I've spoken to Sabina. We had a chat, and you can mention my name. Again, it's much warmer. So you make a call to Sabina and you mention the person's name, and if she remembers, everyone's happy. But she may not recall that connection. That's number 3. Number 4 is what I call a referral. Now, a referral is somebody, this is Sabina, she needs help on her home purchase. She knows all about you and is expecting your call this afternoon. The difference is she's expecting your call this afternoon. That's a referral. And you get that by asking for clients, professional connections, personal clients for a referral. But when they say, yeah, I know somebody that you can give a call, you ask them to contact them to, clear the way, if you like, to do a personal, like a baton's being passed when you're doing the relay race. A bit like the old days when you knocked on somebody's door and you had to put a business card on a silver tray, and the butler took the tray to the madam. Hey, madam, I've got Paul Archer at the door. Wants to come to. That's the kind of thing. That's a referral. So Sabina, she needs help on her home purchase. She knows of you and is expecting your call. That is what you need to do. That's what you want to work towards. If you haven't got that, learn how to do it. We've got our stepping stones methodology, which allows you to do that. So again, which of those you feed from? If you feed from the first one, you're just going to be knocking on doors all day. If you feed from the second one, leads, you've got to be very good at contacting those leads and turning them into appointments. You've got to get really slick at that. That might not be your cup of tea. If it's recommendations, great. But if it's referrals you're working on and getting, that's when you can start doing some really good business. And that's how you get to referral nirvana. So which one are you dealing with? Professional referrals will get these for you. So talk about your estate agents, lawyers, accountants, financial advisors, get some professional referrals. Remember to get them to put it on a plate for you. Personal referrals, absolutely vital. Get those from every client you talk to. Don't forget testimonials. Get your review sites up and running, Google reviews, Trustpilot, whatever you use. Make sure you populate those because people will check those as well. Make sure you got your branding right, your value proposition right. So when you do talk to these leads and they ask you, say, what are you all about then? Why should I use you rather than go direct to the Skipton or whatever? Then you need to have a good response to that one. Know what your niche market is, know where your expertise is, know what your value is. Remember, it's you The customer's sitting down with you, bum to bum, eyeball to eyeball. You're talking, you're chatting, you're conversing, you're consulting, you're helping that person to do whatever they want to achieve. Yes, there's mortgage arranging going on, but you do other things as well. Financial advising, protecting, it's the whole gamut. Make sure you get your value proposition right. Don't forget your CRM system as well, because a lot of these recommendations or leads won't lead into immediate business. At the moment, first-time buyers are rumming and ahhing, aren't they? Because they're worried about house prices falling, and many first-time buyers are just hanging on the fences. They've extended their tenancies for another 6 months, 12 months, whatever. They're just hanging on that fence, waiting. So again, you might get these people who are interested, or might just want to talk about the 100% mortgages or government help, that sort of thing. So again, get them onto a CRM, put them on your CRM, keep them warm, incubate them. They're your client. Don't put them on any other company's CRM unless you have to by compliance, of course. That's up to you. But keep them yourself on your own CRM. Nurture them. That's the future of your business, is your client base. Ask any financial advisor, IFA, who's selling their business for hundreds of thousands of pounds when they've reached retirement. It's the funds under management, it's the client base that they're selling, not themselves anymore, because they're shooting off to Spain somewhere probably. So that's lead generation. Just a few thoughts for you on that one. You've really got to get tight with lead gen moving forward. You can't rely on the inboxes tinging away and the phone ringing anymore. It might happen again at some point, but you've got to work hard at your lead generation. It's what all self-employed people need to do. Hope that's been useful. Bye. There you go. All right, so let's wrap up. It's gone 20 past, so time to wrap up. Make sure that you have a good week. If there's one thing you do this week that is an action plan, get yourself a little CRM system of your own. I mean, sign up for something like Capsule. There's tons of these small little CRMs. They cost $10 a month. You put all your client detail on there, names, addresses, emails. You can keep in contact with them. MailChimp, if you want to, so you can send them stuff through, incubate them. Start building up your client bank and keep in touch with them. Have a kit list. I was reading that so many product transfers are going straight to lenders now. We've lost out on a lot of business this year, brokers. We really have. We talked about it last autumn. We said you've got to get in there with these people. You've got to get in there early. But these clients have gone straight to lenders with product transfers. That's business that would have paid your bills. So it's good to keep in touch with people. You are their advisor. Keep in touch, chat to them, talk to them, give them information, send them birthday cards, send them Christmas cake. I don't know, whatever you want to do, just keep in touch. It's not corny sending people birthday cards. They quite like it. You've got their date of birth. Just write one out. Don't print it. Don't get Moonpig to do it. Write it out, send it off. Everyone's a winner. Chicken dinner, as they say. Anyway, enough of that. Let's ask that you enjoy the rest of your week, and hope you enjoy the live stream. We're on podcasts as well, so you can listen to this if you prefer to, rather than watch me. You can listen to my dulcet tones once a week normally, unless there's a bank holiday or a coronation or something going on. We talk to you. Still got the boot camp coming through. Got some amendments coming through at the end of July, early August. End of July, new syllabus coming in. Don't sweat about that, guys. People think the new syllabus is coming in for CMAPs. Oh my God, it's all going to change. It doesn't. You might have a 2% change in things. So we amend everything as we go along. We do that in July. All the boot camps will be updated, etc. All checked to make sure it's all evergreen anyway. So lots of products going on. Still got the CMAP, got the sales stuff coming through as well. Route to Financial Advisor, got a new one coming up in July for that. You might be interested in that one. That gets you to become a financial advisor. But make sure you're on our database in order to get all this information. If you're not on our database, then go onto our website and you can sign up for it then, or just ping me an email and I'll add you to the database. It don't cost nothing. It's full of value. Anyway, have a great time, everybody, and we'll see you all next week. So let's say goodbye in the usual fashion, and pop a little note on there for you and say goodbye and good luck.